GM, welcome to another week of the Crypto Weekly Recap episode. My name is Josh Gordon. I'm your host, and we've got news stories covering Facebook's new Metaverse project, Elon Musk trying to buy Twitter, and the Ethereum merge being delayed. So let's dive into all these stories from a week of Web3 right now. All right, with story number one, I want to talk about Facebook's Metaverse project. Now, they made headlines this week, and not in a good way. So the project is called Horizon Worlds, and it lets users buy and sell virtual items and land. So now Meta's putting out this project. They want to make a foray into Web3 and Metaverse, since we all know that's coming, and they have the user base to really make a splash in the space. But they came out with this project, and it said that it would have a 47.5% cut of sales on virtual items. So that's almost 50% of the profits that people can make from selling virtual items are being taken as fees from Meta. So they are setting up a $10 million Horizon Creator Fund to incentivize creators to use the platform. But really, people are going nuts here because of the 47.5% cut. To just compare this to what Apple takes on the App Store, they take 30%, and OpenSea, when you buy and sell your NFTs, they take 2.5%. So a big narrative around Web3 compared to Web2 is the fees that these companies take from the creators on the platform and the users like us. And so we like to see in Web3 the fees be a lot lower, and that creators really get to profit and retain the value from what they're putting out in the world. And right now, this example from Meta is really the antithesis of everything Web3. I mean, taking 50% cut is pretty outrageous for a digital item. So hopefully the backlash lowers Meta's fees, and we'll see something revised in the future. With story number two, let's talk about Elon Musk. Elon Musk is making headlines every single week. I mean, he always goes crazy on Twitter. I'm here for it. But this week, he said that he wants to buy Twitter, like straight up buy the whole company for $41.3 billion in cash. This would take the company private, and Elon said that he plans to take the company private in order to go through the changes that need to be made. So in late March, Musk was being very critical of the social media platform for failing to adhere to principles of free speech. And he said that his connection or attempt to purchase Twitter would really help promote democracy and free speech on the platform. Now, Musk went on to say, "I invested in Twitter as I believe in its potential to be the platform for free speech around the globe. And I believe free speech is a societal imperative for a functioning democracy." So he then said about his offer to buy the company for the $41 billion as his best and final offer. And if Twitter does not accept that, he would need to reconsider his position as a shareholder. So first, Musk buys 9% of Twitter. The company asks him to go through some due diligence and a background check, and to basically say that he won't tweet crazy things all the time to sit on the board of Twitter. He denied that, and he came back and said, "I don't want your board seat. I want all of the board seats." So, I doubt that Twitter is going to sell the company to him in this private cash offer, although it would be a substantial increase on the stock price for shareholders, because I think his offer is about 30% higher than, or 20% higher than the stock price is currently listed at. So it could be a good thing for investors, but there's a lot of commentary going on online around, is it dangerous to give such a large social media platform and sell that to someone in a private way? Musk controls so much of the narrative going around online and has such a big presence on Twitter that, I'm not sure if this would be better for free speech or not. But an interesting play here, and you might be asking, why is this crypto related? This is really just Elon Musk related. This is stirring up a lot of conversations around what decentralized social platforms could mean and how that could provide value to us. And right now we're having all these discussions around, what does it look like if a billionaire just owns a platform where all of this communication goes on? And instead, in a more ideal way, we could have decentralized social networks where no one single entity controls that, and that could actually be better for free speech. So I'm appreciating seeing these conversations go on around what a decentralized social network might look like versus a centralized one, and I'll definitely be following this news story closely. It would be pretty mind-blowing if Musk bought Twitter in an all-cash deal. In story number 3, let's talk about the Ethereum merge. Now, we've talked about it in previous weekly videos, but it was currently expected to happen over the summer with a target date of June, but now the Ethereum merge is no longer expected to happen then. Now, according to Ethereum core developer Tim Biko, the network's much anticipated shift to proof of stake might not come until the fall. So this update comes just after the Ethereum network passed a major milestone on Monday of this week, where they did the first shadow fork of the Ethereum mainnet. Now, they did find that there were some things that they still needed to work on after doing that fork, but that was a major milestone for sure. So to recap on the merge signifies Ethereum's shift to proof of stake, and today the network lies on a more resource-intensive proof of work mechanism. Now, that's pretty similar to how Bitcoin runs right now. So by Ethereum moving to proof of stake, users of the network can secure the network by staking their Ether. Now, this is expected to cut the network's energy cost by 99% and help make Ethereum more scalable. The shift to the proof of stake has been getting some slack for constantly being delayed. It was originally, I'm pretty sure it was originally supposed to come out in like late 2019, but it's been pushed back and pushed back and pushed back. And now yet again, people were getting really excited that it was happening this summer. And now we have to wait potentially a couple more months, but they're still optimistic it's happening in 2022. Now, I just want to say that yes, it's unfortunate that the merge is getting pushed back, but this is one of the largest crowdsourced development exercises we've ever seen in human history from a code perspective, and probably the biggest software update that's ever happened. So when we have billions and billions of dollars managed in a decentralized network, it's a good thing that the developers contributing to the protocol are taking the time to make sure there are no bugs, there are no potential access points for hackers, there's nothing that's going to go wrong with blocks. You want to be able to update this network and have blocks be secured, block after block after block, just like nothing ever happened. So for me personally, I'm okay with the delay because it means they're making sure that it's happening correctly and not just happening fast. All right, let's talk about some Unstoppable Domains news. Now, we have 2 stories right now for you. The first one is Unstoppable and Crypto.com are partnering up for an exclusive premium domain drop, all focused on gaming, and it's happening right now. So this is inspired by gaming and popular gaming tags. We're dropping 35 premium .nft domain names and pairing them with one-of-a-kind NFT artwork from really cool artists in the space. Now, gaming's an incredibly popular industry that's experiencing exponential growth. Traditional gaming and blockchain gaming companies are helping to onboard users to Web3 through entertainment. Now, NFT domains have several roles here because they could be a gamer's username, they could be a gamer's name for their metaverse land, and it could be a container to hold other NFT assets such as furniture and in-game assets like swords and armor, etc. This NFT domain event that we're partnering with Crypto.com starts on April 14th, and it will last for 48 hours. So if you're watching this today on Friday, it's still going on. So with the second Unstoppable Domains story, we're proud to announce that we're partnering with Tokenlon once again. So back in February of this year, we distributed free domain names to lawn holders to bring the Tokenlon community closer to Web3. Now, to celebrate the launch of this new login feature that we've integrated with them, lawn holders have the opportunity to win 80 mystery gift boxes worth $10,000 in total. Now, this campaign will be lasting until April 18th. To enter the giveaway, visit tokenlon.im and connect your wallet using your Unstoppable NFT domain. You must have tokens in your wallet, so good luck, and shout out to everybody using Tokenlon and to all of our partners who are integrating login with Unstoppable. For our community member of the week, I want to give a massive shout out to Dairy Nori. Now, they posted on Twitter that 3 years ago, they bought an NFT domain business.zil from Unstoppable Domains for only $1,000. And then they later bought business.crypto. Now, this week, they sold the NFT domain business.crypto for 39 ETH. So that's over $120,000. They made 120x profit on their trade, which is crazy. You know, I'm a big supporter of NFT domain names because I think they are going to be our identity on the internet and Web3. I don't always think about them as, you know, necessarily NFTs that we buy and sell for profit later on. Like, I really think about NFTs as something I'm holding on forever, but it's awesome to see people in our community that are able to make profitable trades by really having the long-term vision from the beginning. So Dairy Nori had the vision. They saw that NFT domains are going to be more useful and more valuable in the future, and they bet on that, and that bet paid off big. So if you're looking at getting an unstoppable domain for your personal identity, or maybe you want to speculate for an investment and a trade future on, definitely be sure to check out our domains. We're always dropping premium ones like the partnership we've got going on with crypto.com right now. So just awesome to see community members really benefit. And with our NFT project of the week, I want to highlight one that's coming up by Logan Paul called Originals. Now, Logan Paul is launching his new collection, Originals 99. There are 99 NFTs, and half of the proceeds that come from the sale go into a DAO with the 99 holders, and they control it. So they can spend the treasury money however they want, and they vote on those decisions. So some of the ideas that have been floated around right now have been investing in other digital assets like NFTs and tokens, funding projects by other DAO members. So this is kind of similar to what we're seeing with Noun's DAO, investing in movie scripts to make actual movies. You know, Logan Paul, he's really said that he wants to be the biggest entertainer in the world and is looking at how he can use NFTs as Hollywood 2.0. I mean, they've even floated ideas around buying a private jet for DAO members to fly to events and also doing some philanthropy. So even though this NFT will probably be pretty pricey to buy into since there's only 99 and he's such a big influencer in the space, I'm still going to be watching it nonetheless. People tweeted about it, so there's definitely a lot of eyes on this project, and I'm curious to see how Logan Paul steps up and provides actual utility here and doesn't just do something that's a cash grab. So regardless, Logan Paul is bringing positive marketing and awareness to the NFT space, which just grows the pie for everybody. I hope you enjoyed this week's episode of our Crypto Weekly Recap. Let us know if there's any topics you want to see covered in future episodes. I'm keeping my eye on what are the biggest stories of the week that are really moving the market and that you need to know about. If you found any of this insightful, would really appreciate you subscribing to the channel. It helps all of our videos reach more Web3 curious and native people. I believe education leads to adoption, so that's what I'm here for. Thank you so much for tuning in. I'll see you in the Metaverse, and I'll be back next week with another episode.